Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Pachordiz. Markets woke up to the worst flare-up of violence between Israel and Palestine in 50 years on Monday, after Hamas launched surprise missile attacks into Israeli territory over the weekend. Oil futures initially shot up more than 5% as fears grew that the conflict could escalate into a proxy war with oil producer Iran, which is speculated to have had a hand in the attacks. Gold took the lead as investors flocked to safety, rising by about 1%, and the US dollar, Japanese yen, and Swiss franc all benefited from their safe haven status too. Stocks came under pressure, but there were no signs of a major panic. If the war remains confined between Israel and the Palestinians, it's likely that the markets will forget about it after a few days. What's been somewhat surprising in the market reaction today is that riskier currencies, such as the Australian and New Zealand dollars, are having a relatively calm day, while the euro and pound are underperforming. It's possible that the stagflation clouds hanging over Europe and the UK got darker as oil prices surged. Perhaps a better explanation is the shockingly strong U.S. jobs report on Friday. Far from slowing, the U.S. economy added a whopping 336,000 jobs in September, although the unemployment rate did not decline as expected, and annual wage growth eased slightly. Investors ramped up their bets of a year-end rate hike in the aftermath, but the odds stood no higher than 50%, and they've since fallen back again amid the troubles in Israel. Further swings in Fed rate hike pricing are expected over the coming days, as the minutes of the September FOMC meeting are due on Wednesday, and Thursday will see the release of the September CPI report. A hot set of inflation numbers could put a November or December rate hike firmly back on the table, especially if Fed policymakers continue to signal higher for longer, as several of them line up for public appearances this week. The inconclusive outcome of Friday's non-farm payrolls helped Wall Street to rally at the close, ending the week higher, as investors focused their attention on the soft landing scenario. Futures were in the red, however, and barring any new headlines from the Middle East, it could be a quiet trading day, as the U.S. bond market is shut for Columbus Day. Thanks for watching today's market comment here at XM.com.